generally be a lot cheaper than going out and buying it from a firm.
Well, the reason we do it in-house is because we think this is all extremely new stuff, and therefore the people in-house can understand in more detail the products that we have. But it's a call. We could certainly hire a consulting firm or similar to do some of the things which our people do, and so that's how we try to judge that it's a fair amount.
Yeah. It just strikes me as odd that the costs of generating this £396 million of revenue would be quite as high as they sound as if they are, so that you...
Well, no, that's 396 is the revenue earned by the UK operation, paid for by Ireland, and it's based on the cost of all the activity which we do here, plus a margin in order to reflect what we pay in the open market.
Right, and you're selling those services to Google Ireland, which is paying you for.
Correct.
Yes? Right. Well, you said you had 1,300 employees in the UK. If you paid them £120,000 each, then that would cost £156 million. That would still leave you £240 million of other activity that Google Ireland would have to be paying for. I find it difficult to understand what Google Ireland is paying for that it's getting value for. I don't know if you are paying everyone £120,000 a year, but it just sounds very... There are a bunch of other costs in there, including the cost of real estate. Our people are in 2 very big offices in central London and so on. So I'm pretty confident that those are the costs that we pay out, because we would want to make sensible choices. What are the costs?
No, the people and the real estate costs and the other costs of having an operation of that size.
I'm sorry, you said you're pretty confident that those are the costs. I'm asking...
the 396.
What are the costs?
You've done a back of an envelope thing. I can share with you the accounts which are published and audited every year.
Yes.
And the amount of revenue has gone up as the business has grown. The revenue line, I think, is double what it was 3 years ago, to give you an indication.
The revenue line from Google Ireland.
The revenue of Google UK Limited, yes.
The revenue of Google Ireland paid from... the revenue of Google UK Limited paid from Google Ireland has tripled in the last...
just more than doubled in the last 3 years.
3 years. So Google Ireland is paying you a lot more for a lot more services.
But don't forget, our business is growing pretty fast in the scheme of things as an internet business, and it's pretty popular.
Well, if you were able to send the committee a note with what those costs are, I'd be very grateful.
Certainly I can provide you a detail on that.
Okay. One more question from Steve, and then we can move on to a few general questions.
Could I check what royalties you pay in Ireland, whether that's to the Netherlands or to Bermuda?
The question was what I'm struggling
What royalties do you pay from Ireland?
I don't have a number on royalties. I don't think we have anything we would describe as royalties. The revenue earned by Ireland will have a bunch of costs against it, including the 3,000 plus people, the property, the data centres and so on, and then, yes, some costs associated with the international businesses we've talked about earlier.
So you don't pay any royalties from Ireland?
I don't know how I would describe it as royalties, but again, what I can do is provide you, I think I promised to provide you with more of a breakdown.
Perhaps you could just clarify, because looking at the SEC filings for Google, it said the total amount of foreign income before tax was $7,633 million US. The foreign tax charge for the year, including deferred tax, was $248 million, which is equivalent to 3.25%.
Of revenue?
Yes, 248, which is equivalent to a tax rate of 3.25%.
Of revenue?
Yeah.
Yeah, well, tax is paid on profits, obviously.
So, no, on the income before tax.
I'm sorry, I struggled to hear you.
The total amount of foreign income before tax was $7,633 million US. And yet, the tax charge for the year, including deferred tax, was $248 million, which is equivalent to 3.25%, and that's in your Google's SEC filings. And I was just trying to take that
as read. What I can tell you is
how you got to
in 2011 we paid $1.5 billion of corporation tax in the US, which is an effective rate.
So this is on foreign income.
This is
on foreign income.
Right. Okay. Well, I'm just confirming back the total.
Not what
US
you paid in the US on your US income.
Right.
This is about foreign income.
I don't have the figures to hand, but again, I'm very happy to answer any specific questions you have.
It's your bit of the world, actually, Mr. Britton. That's the bit you're responsible for.
I'm responsible for Northern Europe, which is a part of the international, but not by any means all of the
money
international.
from which is ending up in Bermuda. And what we're trying to establish is, in your SEC filings, you yourself said this is a US company. In your SEC filings, as I understand it, there's SEC rules or there's IFS rules about passive income. And so one of the ways around that is to check the box to say this isn't money coming back into the US, it's going in to be parked possibly in Bermuda. And you're telling the US authorities that actually the foreign tax charge for the year is just 248 million. So US authorities, the question in my mind is to what extent, in essence, are you depriving the US taxpayer? Because you're saying to the US taxpayer, actually, there's only £248 million of taxable income here, which works out at 3.25%. So the implication is that a lot of the profit is being stripped out somewhere. And what's unclear to me at the end of today's session is is it being stripped out? And if so, where is that happening? Is it happening in Ireland through royalty payments elsewhere, which was a discussion we had earlier around the 6%, the 4.7% rates? Is it going into the Netherlands, or is it being parked in Bermuda? And the implication of your SEC filings are that a very low tax rate in terms of the US is being paid on your foreign income.
Yeah.
We've established today that you're not paying tax on the income from the UK, so it's very unclear as to where the tax is being paid in the chain.
We are paying tax on our UK limited business, as I've mentioned a number of times.
Negligible.
We're paying corporation tax based on the activity that is carried out here.
Based on the activity you choose to file in Britain. It's the activity you choose to file.
But I think the distinction here between what I've been talking about and what we've been discussing earlier with consumer sales businesses is the technology is US technology. Now, to come on to your question, let me come on to that.
I'd like you to.
But I was just correcting again the fact that we pay corporation tax in the UK as we're required to do. In the US, I haven't got the figures, but if you're quoting from the SEC filings, of course they're correct. I'm sure it's the case that we pay more tax on the US earned revenues than we do on the revenues in the rest of the world. And I can answer the questions as I promised to do that you raised earlier on that. What I'd say is, as an international business that's a US-owned business, we make choices about where we locate and how we set up our structure in order to ensure we can operate successfully and to minimise the costs and do the efficient things to run our business. That's what we're required to do by shareholders and by law, and that's what we do, play by the rules and manage our business efficiently.
Okay, let's go on to some general questions. Do you, all of you, accept that alongside your duties to your shareholders, as Mr. Britton has just alluded to, you have obligations to the societies in which you operate and from which you derive huge benefits, and that those obligations include paying tax?
Yes.
Yes, very much so.
And do you accept the principle that profits should be taxed in the countries in which they're made and where genuine economic activity is concerned?
Very much so.
Yes.
Profits should be taxed in the countries where the economic activity takes place that drives those profits. So in our case, where the innovation takes place. Our business is made in California.
This is ridiculous.
Well, we're not making cups of coffee. We're making research.
If you accept that, why on earth are you all? I think we've been through, coffee that we know we drink in the UK, to books that I know I get in the UK, to Google ads that I know are just UK search engine specific. Why on earth do you manipulate your accounts so that you get away with not paying corporation tax, which is what this afternoon is about, in the UK? Mr. Ulster.
Respectfully, I would disagree with that characterization. Chair, we do not manipulate ever anything anywhere. We work very hard to be very honest.
You can't say that.
It is very true.
You can't say that you don't manipulate the royalty charge. In your case, it's the royalty charge. It's the manipulation of the charges for loans that you make the UK wholly owned subsidiaries take out, and the price of coffee, which you charge 20% whatever the price is for. That's manipulation. It takes money out of the UK, which would otherwise be viewed as profit and would be taxed through corporation tax. It's manipulation.
Respectfully, those jurisdictions require us to report profit where the activity happens. We have no choice.
No, it isn't where the activity happens. You choose to charge 20%. You choose to take 20% for your Swiss coffee. You choose to do the 60% royalty, and you actually told us that it's what you could get away with. There wasn't a basis for it, and you choose to charge above market rates for borrowing. You choose that.
No, I completely disagree with that characterization, Chair, respectfully. That is not at all how we approach it. All of those rates that you've just referred to have been heavily scrutinized by valuation experts, by independent third parties who fully agree with those rates, that they're appropriate and fair, by the taxing authorities all around the world. We absolutely do nothing to avoid taxes.
Mr. Cecil, and then I'll come to you, Ian.
We set up our business across Europe for the benefit of tens of millions of customers and sellers across Europe. We pay all applicable taxes in all jurisdictions.
We operate compliant with the tax law in the UK. We've had a discussion this afternoon about Bermuda, and let me just reiterate the fact that the tax we pay in the UK has nothing to do with anything outside of Europe. And so what we do in the UK, we love the UK. It's a successful country from e-commerce. We think we've been a part of that.
We think we should put a bit more money back in.
But we follow the rules that HMRC lays out when they say that we should be taxed on the activity where we generate our profits. For us, that is all of the engineering work that's done in California. As I said, I wish we'd invented Google in Cambridge, ideally, but we didn't. It's an American business, and the engineering activity continues to be led from there.
Get a feel, how many sets of accounts have yet to be agreed with? I will come to you in a minute. How many sets of accounts have yet to be agreed in your business, Mr. Alsted?
In the UK?
In the UK.
The years 2010 forward are under review.
You've agreed everything before that?
Yes.
And Mr. Cecil, how many sets of accounts have yet to be agreed?
As I said, we're regularly audited by...
How many sets of accounts have yet to be agreed with HMRC?
I don't have that specific figure. I will come back to you with it.
How many sets of accounts have yet to be agreed?
Our accounts are with Companies House for 2011, and we're
no,
trading...
not Companies House, with HMRC, the tax basis.
Will be available to HMRC as well. The year's closed for 2011, and I don't think there are any outstanding issues, but if there are, we'll let you know. HMRC haven't told me that there are.
Okay, yeah.
Can I ask another general question, which is, do any of you have any discussions internally about issues like consumer power and the value of your brand, and how that could be influenced by the ethical behaviour or perceptions of your company, and how do you factor that into the sort of discussion we've had this afternoon?
Yeah, I mean, everybody who uses any Google service is a choice. All of our services are free to consumers, and so we work extremely hard to try to make sure those services work well and that the consumers feel a level of trust with us. We talked earlier about the statement, don't be evil, and I think for us that means when we give you web search results, we try to give you the best and most neutral results that we can do. So that's how we operate, and if consumers didn't like what they were doing, they would go elsewhere. There's plenty of choice. If you want to buy something, you can go to Amazon. If you want to get a job, you can go to Monster. If you want to get the news, you can go to the BBC. So I think that definitely is very much at the forefront of our minds every day.
Before the others answer, my question is not just about right now, it's about the trend that seems to be occurring. I'm sure we've got some representatives at the back of the room of people who are now starting to say, well, don't deal with this company because they don't behave ethically. And that could be to do with paying taxes.
It could be. I mean, I think one of the great benefits of the internet is it's brought an awful lot of transparency and an ability for consumers themselves to publish information and to be heard. And I think that's a good thing. And we very much support freedom of speech on the web. We want to hold ourselves to high standards. I hope I've tried to explain as transparently as possible this afternoon how we operate. We'll happily answer any follow-up questions you have. But absolutely, our business is completely built on trust of consumers. They won't come to us if they don't like the service.
Okay.